Welcome to the Winnie Podcast. This show is focused on empowering ranchers. Whether you're a seasoned rancher or just getting started, we'll guide you on how to use the infinite banking concept as an alternative way to finance your operations. It's a better way to think about money. Join us as we discuss planning for the future, attracting the next generation, and the art of keeping more money within the family. Here's your hosts, Winnie and Lacy.
Hey, welcome in. We are back for another great discussion between Lacy and I, and we are fresh off of having a great conversation between the clients that could show up for our intimate session with Mary Jo Irmen yesterday. And a couple of really great things really came up because the session was really designed to deepen our relationship with being successful at implementing the infinite banking concept into our practice. So with that, Lacy thought about, okay, well, what are some things that we can really bring to the table so that we can also share it with you, since some of you may not have been able to show up. There was a couple of different items. Lacy, why don't you go ahead and share?
The one client on the session really engaged with Mary Jo to discuss infinite banking with her, and he was challenged. So if you have a policy or you've read the book, you probably know you have to pay a required premium to keep the policy in force and in good standing. And then you're allowed to put in over and above that premium. I don't know, there's lots of different terms: dump-in room, optional dump-in room, deposit option, extra premium. It's referred to a few different ways. So this particular client was challenged by Mary Jo to put in basically every dollar that he can into his policy instead of just the required premium to keep it in force. And so that really got my wheels turning just about the psychology. And it even goes back into Nelson's book, and I can't remember where he puts it in the book or where he says it. If you give someone a deadline,
Parkinson's law.
To create a project or to complete a project, and you give them 30 days, 29 and a half days is when they're going to have it done. Now, I even have something sitting on my desk right now that I have to work on for one of my volunteer positions. And guess what? I've put it off because I know that I have more time. So let's just talk about the psychology behind why we only pay required premium and challenge to pay it all.
Nelson put under the human conditions, one of them being Parkinson's law, in the Becoming Your Own Banker book, because he said, look, if you want to become really successful at implementing this lifestyle, you got to beat Parkinson's law. And there's a few different things about Parkinson's law to overcome. If you can become a person that is more proactive, like not having to necessarily wait till the deadline to get things done, then you'll have more of an opportunity to overcome the negative consequences of doing that every single time. So let's say your required premium is $10,000 a year, but you have an opportunity to dump in an additional $10,000 optionally. You might wait until month 11 to put in that additional optional room of $10,000 instead of right at the beginning of month 1. The challenge that Mary Jo was talking about was, why do that? Just commit to putting all that you can, like you were saying, as soon as you can up front, because what is that going to positively do for you in your policy is that it's actually going to, number one, increase the probability of a higher dividend if the life company issues that dividend on your policy birth date. And number two, it just means that your money is working harder for you for a longer period of time. And then that money is also accessible to you. I think the psychology that you're talking about is sometimes it's like overcoming the thought that this is an expense when it's actually a type of financial instrument that really allows you to have liquidity. Now, depending on the age of your policy, you might still be in a state where not every single dollar you put in is 100% accessible. But I promise you, give it time, which time does go by fast, it will become all accessible to you.
It's going back to what you said, we have to overcome our thought process that this is an expense because we're doing our books like a good business person. $10,000, that's our premium, but we're labeling that as an expense. what we should be doing, using your example, if we have 10,000 required, 10,000 that we're allowed to put over and above that, that expense on our books should be 20,000. There should be no question about us coming up with the extra 10,000, because you and I both, and Mary Jo too, we've all had conversations with clients who were like, okay, well, if all you ever do is pay the required premium, this policy is not going to do for you what you want it to do. It's not going to meet your goals, plain and simple.
And it's not going to meet your expectations, and it's going to seem like a disappointment.
Yeah.
I've ran and seen the numbers enough times to know that if all you do is pay the required premiums, you can't attach the mindset of infinite banking to that behavior. If all you're doing is putting in what's required, it's just not going to be the right vehicle to drive the mindset of becoming your own banker. And in fact, if all you want to do is put in the required premium, what you have is a stellar, top-class savings account, better than any high-interest savings account you'll ever have. Not even a GIC. Not even a high interest savings account will give you the same terms and conditions that a dividend paying whole life insurance contract can do for you. But it certainly will not perform like you need it to for IBC purposes anyway.
If you're our clients, or if you become our clients, you're going to hear us more and more giving you that tough love. Pennies in, pennies out. Nelson said that too. We can really and truly go back to becoming your own banker where it all started. And Nelson gives us that hard love all throughout that book. Pennies in, pennies out. If you don't treat the policy in the manner that it allows you to treat it and to promote the growth, it's not going to meet your expectations and you're going to be disappointed.
I think this also came up yesterday too. Some resistance also happens when you know that you have access to an existing loan or line of credit that you already have at your lending institution. And the interest rate on that loan or line of credit is perhaps a lower number than the policy loan interest rate of the insurance company. And this is also why most other insurance brokers don't necessarily get right on board with sharing the infinite banking concept, because they cannot wrap their mind around this either. This is because most people think that financial stewardship is all about measuring the rates of return on something, when this is actually about who is in control and what is the best way to finance something. This isn't about like measuring rates of return or what is a better investment for your dollar.
I think it can kind of be tied to when someone is thinking that, oh, I just can't max it out. I just can't max out my contribution to my policy. I think it can be tied back to a scarcity mindset too. What's the lost opportunity cost if you don't?
Or maybe the stick. Everyone knows that if we don't make at least the interest payments to the bank, there is a punishment because it decreases our credit score. And if it decreases your score and you do so much business and you rely on the banks very heavily to finance you, if you don't make the payments back, they're going to increase your interest rate in terms of how much they lend to you at, because you're a higher risk if you're known for not making payments on time. So there's a very real psychological stick. Or if you don't make any payments at all, you can lose what you've used to collateralize that loan. Because there's that stick, you'll come up with the money to make that payment. That was Mary Jo's exact argument. It's that you come up with the money regardless of what happens, but it's like pulling teeth to come up with the same amount of money for the full premium. So she used the term full premium, which is what we have to retrain ourselves, because I think a lot of the times when we're introducing this to prospects who are interested in the infinite banking concept in our own one-on-one, there's a required premium and then there's the optional amount of money you can put in. And I hate to say it too, I fall short and call it dumping, just as an easy way to explain things.
We all do, I think.
Yeah, but we're not actually doing it justice by calling it dump-in room. Mary Jo's challenge to all of you who currently have a policy in place, or if you're brand new to this and you're really considering it, it's great to know that there's some built-in flexibility. If you're going to be driven by the same stick that you're going to come up with a payment no matter what when it's bank's money, then respect your money the exact same way because it's your own now.
Yeah, and I think planning is so important in this because maybe you can't pay the full premium all at one time. Maybe you sell some bred heifers. Maybe you sell some heifers in the spring that you backgrounded all winter. Maybe you sell some peas or beans throughout the year, and you know that you're going to have those windfalls of capital throughout the year at different times, then just plan on making contributions every time you know you're having a windfall. It doesn't all have to be done at one time. Is it better if you do it all at one time when your required premiums due? Yes. Does it have to be done that way? No. So if you need to plan throughout the year to make I'm gonna call it dump in, to make those contributions to max out that full premium, then let's sit down and plan it. That's what we're here for. We're here to strategize.
Start rethinking your thinking and understand that when you are getting used to the fact that you can maximize your full premium so that when you do have that windfall, you're making your windfall work for you before it leaves your pocket. So you get this windfall that feels absolutely so great. But what if you could put that money to work for you before it leaves your hands again, instead of just going, in, out, you know?
And if you need us to actually show you the impact to your policy, I'm happy to show you that. Okay, you made X amount of a payment today. Let's give it a week and I'm going to show you what it's done to your policy. It's incredible. And I actually do that with myself and with Reed. He has me as an advisor and Winnie. So he literally has us, in his back pocket all the time. But I will still say, hey, client Reed, this is what your payment did to your policy. Here's the impact to it or whatever.
What this also gets me thinking about as well is that everything that we buy is a financing decision. Mm-hmm. And that financing decision means every time we spend money on something, either we've parted ways with interest or we've given up the interest to grow that money that we've parted ways with. And how many times do we buy something? Every day, either it's coming out silently because it's a pre-authorized payment on our credit card or a pre-authorized payment out of our bank account. And then there's the stuff that we do that's online. And then there's the stuff that we do when we're at the grocery store. So every single financial transaction that we have is either going to help us keep more money in our pocket or not. All of us will sooner or later either have a peace of mind knowing I'm going to have enough, more than enough in my latter part of the years if I decide not to work. It should be the basis of everything you do before you put money back into your business, before you invest in something. It's not saying that you can't invest in your business or you can't invest in something. It's just do this first as the foundation of everything you do, because it will help you to combat all the financial headwind that we face. Yeah. Because practicing this creates more of a financial tailwind to get through life.
I had a meeting with a client yesterday and she kind of has become a friend. We just started talking about stress around finances and what can we do to relieve some of that stress. And one of those things was not avoiding. Did you check your bank account today? Because it doesn't matter if you have $1 or $100,000. If you know that you have $1, and you alleviate the stress just by being in the know and not avoiding. And so I think that comes right back into infinite banking in our policies. If you avoid it because you think that you don't have the money to pay your full premiums, you are going to be stressed about it not performing the way you want it to be.
Definitely. I know what it feels like to have a client and then have them become your friend.
Right? Yeah. Look it up. Look it up. Yeah. It's really bad when there's clients who are also horse lovers and then half of our meeting is business and the other half is let's just talk about horses.
Yeah, and it's good to surround yourself with people who also care about the same thing. It's also tough, especially if you're in partnership with someone who may not be aligned on the same page of how much effort is being put in the financial arena, right? Because there's so many other competing priorities. Lean in on us, lean in on this podcast, have us be your friend on the side.
Yeah,
right?
Share this podcast with others. We're all chasing the same thing. We're trying to live a good life, make a living, help people. We're all after the same goal. It just, the way we earn our income looks different. So yeah, share this podcast. If you know somebody who you think it would be an encouragement to, share it. We would love to hear your feedback. Our audio book is going to be published right away. So by the time this episode airs, it's already published. So kudos to Winnie for spending hours upon hours recording our audio book. So it's now available. So it doesn't matter if you're in the tractor, the feed truck, on your horse. There's no more excuses, guys. No more excuses. You can get this content in. Head over to our website, rancherway.com. That's where you're going to find the button right on the homepage, bright and center, to order your copy of the book. You're now going to get it in a bundle. You're going to get the hard copy and the audio book. So you and your partner, your spouse, can both have a listen. So head over, check us out on YouTube, iHeartRadio, Apple, and Spotify. Bye, guys.
So glad you leaned in with us on the Winnie podcast. We truly hope you're feeling more informed and empowered to take another step towards optimizing your financial life. Right now, make sure you hit subscribe so you can keep growing and learning with us. Until next time, we wish you prosperity in every area of your life.